When I first arrived in April of 2009, it's hard to believe that the Sensex was less than 10,000.
8,000 plus.
Correct. And I would say the sentiment was quite somber. We were then in the midst of the elections, and there was concern that it was going to be an indecisive election result. So therefore there was concern that there would be policy paralysis and there'd be lack of decision making by the government. And of course, as it turned out, there was a convincing win by the Congress Party, and sentiment suddenly turned around. We had the recovery in the capital markets, we had the loan markets opening up, and then we saw the Sensex continue on until it peaked at 23,000 about 18 months ago. When I first arrived, we were suffering quite badly from our unsecured retail lending, where we took some significant losses. I guess from the period from 2004 to 2007, we grew very strongly. A big push into retail lending with open market sourcing. But then when we had the slowdown in the second half of 2008, then some of those weaknesses in relation to that strategy came out. And as a result, we had some quite significant loan impairments, which affected our results significantly in 2009. On our commercial banking front, again, we had some customers who suffered from the financial crisis, and we had some significant loan impairments from there as well. So the last 3 years has been a journey. First, we dealt with the asset quality problems, and having fixed those, then it was about moving into the next stage, which is about growing our business and putting us on the road to what is our goal of achieving $1 billion pre-tax profit in 2013. Certainly we're seeing some what we call CRR migration, so the credit risk rating of customers. We have certainly seen a bit of a negative movement over the last 12 months. And certainly in terms of companies which we're monitoring, it is a little bit higher, but nothing more than what you would expect at this stage of the cycle. Well, certainly in terms of infrastructure and the power, what we have done is we have actually associated ourselves with strong sponsors. So in other words, promoters or corporates who have the ability to be able to withstand any short-term problems in relation to those projects. In addition, we don't have the ability to provide long-term rupee funding because we don't have the deposit base for that. So we've focused quite a bit on ECA financing, so export credit financing. So for example, on a power plant, if they want to import a turbine, which will be a major piece of equipment, then we'll provide funding, usually foreign currency funding against Exim financing or from other export agencies. So we have found that is a good way for us to participate in the infrastructure and power sector and help in the growth of those sectors in India without the requirement for us to involve ourselves in long-term rupee funding. We don't have exposure, so for us, the airline industry is one that's we have had some involvement in airlines at different stages of their evolution, but it was an industry where we started seeing the stresses a number of years ago, and I think it's a case of the airline industry. It will restructure itself. There are some structural changes that are required in the industry. There are some structural changes that are required in some of the participants in the industry, and I'm confident that they'll find their way through it, because at the end of the day, there is huge demand for people flying around India, and India being a big country, it has to have strong domestic airlines. So I think this will be just one of those difficult periods, which the industry will go through, but I'm sure it will come out at the other end and hopefully stronger and better. I think it's a case of there is a danger if you try and find one villain for the economic slowdown. What invariably happens is that there's a lot of factors which come together to cause a slowdown. There are the exogenous factors, the issues in Europe, and certainly the sovereign debt crisis in Europe. It's had a big impact upon growth in Europe, which of course will affect exports. It's also had an impact upon some of the European banks who were big lenders to India, and they've had to curtail their exposure to India as they've had to reduce their balance sheets. You've also had the challenges in the US, where the green shoots we saw 2.5 years ago failed to grow into anything significant. And a slow growing US has an impact upon the whole world. So we had these factors which were affecting India. Probably the other key factor that affected things was import costs. I should say input costs into industries. So in particular, oil, coal, commodities. And that's had a big impact upon a lot of corporates here in India, because they haven't been able to necessarily pass those increased input costs onto their end users. The other thing you've had at the moment is something quite unusual. With a slowdown in Europe and the US, the expectation would be that oil prices would fall. But in fact, we've had exactly the opposite. We've had oil prices increase. And of course, increased oil prices have a huge impact upon an energy-hungry country like India, which has to import most of its oil. So there's a lot of factors that have come together.